All right. So my name is Fan Yang. I'm a CMT and a trader. I basically trade the majors, so we're just going to spend most of our time talking about that. We'll be taking a look at the different time frames. I'll start with the 1 hour time frame, and as you can see in this chart, I have some technical indicators. I'll just run through them quickly. I use the moving averages, the RSI, a Bollinger Band, which I put 3 standard deviations away from the 200 moving average. The conventional parameter is 2 standard deviations from 14, but I like to use a wider Bollinger Band. It gives me a cleaner, I believe, oversold, overbought type of signal. All right, so beginning with the euro dollar, it's been a couple of choppy weeks coming down. And at the moment, I'm at the cusp of looking at this market to break to the upside, but there isn't a lot of upside because there is a strong declining trend line just above, okay? This trend line goes all the way back to 2011, May of 2011. So the upside is very limited, okay? The downside is also, it's also limited to this rising trend line for now. So we're facing a market with that's going into the apex or a convergence of these two trend lines. Okay, so it's going to be choppy. It's going to be if you're trading very short-term intraday charts, getting in and out quickly would be the ideal strategy or overarching strategy. We're not looking at any trends at the moment, so we're basically looking at short-term overbought, oversold in this type of choppy market. Okay. Now, if the market breaks below this trend line, we introduce the bearish continuation idea. If the market breaks above this declining trend line, we introduce the bullish idea, and that would probably come from a clear above 1.32. Okay, above 1.3170 high and above 1.32 will probably clear this declining trend line, and we would be looking at quite a significant upside at that point. But again, before that, we should probably respect these trend lines and short-term support and resistance. Okay. Sam Shale. Okay, so 314 BB. I think I just mentioned my Bollinger Band is 3 standard deviations using the 200 simple moving average, okay, for the Bollinger Band. All right. Okay, so in the daily chart, non-directional. Okay, let's look at the 4-hour chart and lower time frames. In the past couple of weeks, we have been able to make lower highs and lower lows, so you can say that it's in a downtrend in the short term. Okay, and even today, with a very sharp reversal here from 1.28, or I shouldn't say reversal, but a bounce from 1.28, we saw the market even break above 1.29. But I think, until the market breaks above 1.2960, the short-term mode is still bearish correction. Okay, and I think there is still further downside towards 1.2750. Okay. And possibly even a little lower to test this rising trend line. All right. As far as momentum goes, when you look at the 4-hour chart, what I like to use the RSI for is it gives me an idea of the trending momentum. Usually you look at RSI, it's an oscillator. You look at overbought, oversold conditions. That's one way of looking at it, but I think another way you can is if the RSI pushes to 70, we missed the 70 level a couple of times here, but if it kisses a 70 or tags 70 and stays above 40, that's generally a sign of the market building bullish momentum. And you saw that momentum built throughout August. And here we had strong bullish momentum. And now the RSI is between 60 and actually broke below 40, but staying above 30. So the momentum is very unclear at the moment, but it is It does show loss of the bullish momentum, but it doesn't show any establishment of bearish momentum. Okay, so further clues needed for this pair. For me, I believe in the very short term, we can still look for a bearish outlook in this pair down towards 1.2750. Okay, 1.2750 is also a resistance pivot from earlier in June, and this support pivot here. So that would be the maximum bearish outlook at the moment. Okay, and I would say that a break above 1.2960 makes that bearish outlook unclear and, takes the bias away from me. Okay. So if you want to plan a trade, I don't think this isn't the best probability, because we do see a very strong push here. That's what I'm a little bit concerned about. We see some strong demand at 1.28. Okay, so as far as trade management goes, if there is a short, if you're holding a short or initiated a short, and I would put my stop above 1.2960. And as far as trade management goes, as it approaches 1.28, I would move my stop closer to lock it in, some profit in case the market does continue to sort of anchor out of this decline and start sideways and maybe even reverse back to the highs here. Okay, so this is a bearish outlook, but be nimble in your trade management. Okay. All right, so Solomon, the euro is just above 1.29. Do we care about these basically whole numbers? Yes, I think psychological numbers like 1.29 is important. We saw 1.28 being a support. Okay, but let's go down to the 1 hour chart. We did see 1.29 crack, so that was kind of key. It's not the most important. It's not the most important event. It's not the most important break, but I think the ability to do that does show you that bears aren't in full control. Okay, and it's been like that throughout, right? Very choppy market. Okay. Paul on the RSI, notice that once it pushes above 70, will often more than 50% of the time go back, then back above 70. Yeah, so when we talk about the RSI, aside from the conventional assessment that over 70 means overbought, there's also the use of RSI pushing above 70 as a sign of bullish momentum. Okay, for example, in this 1 hour chart, so here we have the RSI sort of whipping 30, 70. Here we tag 70, 30. So this was pretty much a sideways type of momentum. Okay, and then when the market pushed above 70 and then stayed above 40 and pushed above 70 again, that shows you that there's bullish momentum developing. You also saw these moving averages start to spread out when they were pretty much sort of glued together over here in the consolidation mode, and then you have a breakout mode, breakout in momentum, breakout in the RSI alignment. And as far as the Bollinger Band is concerned, it pushed the Bollinger Band wider, and that is a sign of a trending market. When you see the Bollinger Band here sort of narrower, that's a sign of consolidation. And then when it pushed above, it's a sign of trend. Although in the near term, when this RSI was above 70, when the price is above the Bollinger Band, that shows you that it's a bit overbought in the near term. Now that doesn't always bring a strong correction, as in this case, the market just sort of stalled sideways before taking off further. So, that's my use of the RSI more as a trending type of indicator. Now, as far as whether it goes back above 50% of the time, I don't know that stat, but I think we're on the same page that when the RSI does go above 70, it is a sign of a bullish market. Okay, but I would wait for the RSI to come back towards 40 to put in a position if I'm looking at a bullish market. Okay, so looking at this euro dollar here, okay, first of all, we don't have any clear momentum, right? But what we could say here is that, okay, so the RSI tag 30 comes back to 60. This is actually where, I would consider the short position, okay, around this area. Okay, it's a little bit above 60 now, so I'm not, confident of this trade anymore, but I know it's a choppy market that, it's not a trending market. So the stop should be above 1.2960 in my opinion, if for a bearish outlook here. Okay. Okay, so Len, do you use a specific moving average for bias, such as 50 or 55? Well, the main moving average for me is the 200 moving average. For me, that's sort of the mean price action, and at times when the market, tags the upper or lower Bollinger Band and it's not trending, I'm looking for it to revert back towards the 200 moving average. Okay, but when it's trending, you'll see that the moving average will come up to catch up with price action a lot of the time. So, there's sort of a discretion on how you use those Bollinger Bands. Now, the other moving averages here, I have 100, 55, 21, and 8. They're more for me to visualize the strength of the trend or the lack thereof. In this case, there's a lack of trend, right? The moving averages are glued together, sort of whipping across each other until we get a spread. The moving average is aligned either to the bullish or downside. We don't have a trend. Okay, so that's what I use the other moving averages. I think it doesn't matter what the moving averages are. For me, it's just that I need a span of a range of different parameters from 100 down to 8. Okay, so it shows you the strength of the trend in different degree, and if it's aligned. Like if right now, if this 200 moving average is up here, and then the next one is 100, and then 55, 21, and then 8. So if they're aligned like that downwards, highest at the top, then it is a bearish trend developing. Okay. So for now, like I said, the euro dollar is very choppy. You could, I believe in the very short term, you could try to take a position here. Okay, but be careful because of this sharp move and the lack of trend. Okay, you're playing more of a choppy sideways market now, and very near term outlook. Okay. All right, so moving on to the pound, which was already at a key level here, 1.63. That was the 2012 high. We saw the market test it and was not able to clear it. It sort of cracked it, but rejected. So in the daily chart, we see a market that, first of all, has resolved the overbought condition, okay, and is consolidating just below the 1.63 area. Okay. Now, it doesn't have any bearish momentum just yet. So if you are looking for, the downside, we should be looking for some resistance levels. Okay. And as the previous gentleman was, noted, there's too much upside in this case for the bearish outlook. There's all this space up here that the market can push to before supply comes in and pushes it back down. Okay, so at 1.6150, we're sort of in a no man's land here, sort of in the middle of a range. Okay, now I just want to, you see a little spike here. I think this is actually wrong data. In my other platforms, I don't see this spike. I think if you're looking at the cable right now, you probably don't see the spike here. So let's ignore that. The point here in the 1 hour chart is, look, we're in a choppy market. We are, we see a little bullish divergence. We saw a little, tag of the lower Bollinger Band. And I would say that this is also a divergence because the market was able to push below the Bollinger Band here, but then now it's staying within the Bollinger Band. So it's showing a loss of that, bearish volatility and bearish momentum. But now we have already resolved that. We have the RSI back to 50, price action back up here with it near these previous intraday resistance levels. So, no edge here. Okay. The concept of reverting back to the mean would be a reversal back to 1.62. Okay, so if you were down here, that would be good. You could hold your position to these levels, and when the market gets to these levels here, you see these pivots here. I would try to scale down, or put my stop closer in order to lock it in or make sure that I break even. Okay, so with these trades here, if you're in these trades, it's a choppy market, and you should be more protective of your capital than trying to hang on and wait for a trend. Otherwise, just stay on the sideline and wait for more overbought conditions and at resistance levels, or oversold conditions at support levels, and that would be coming up. Actually, we do have a rising trend line here from August. Okay, so I think 1.60, 65 area, maybe even higher, 1.60, just below 1.61, we could be at some support level. Okay, so at 1.6160, we are in no man's land, waiting for the market to go to some resistance or support and overbought, oversold conditions. Okay. All right, so moving on. Euro pound. Okay, let's take a look at that. All right, let's go to the daily chart. Euro pound is another one that's sort of getting into this convergence of trend lines. We saw that in the euro, right? We saw that in the euro daily chart, right? Going into some convergence of trend lines. And even in the pound dollar, in the cable, we have a rising support versus this 1.63 horizontal resistance. Okay, so we're in some directionless, choppy market in the euro and the pound dollar, and also in the euro pound. Okay, looking at this daily chart. It's staying above this rising trend line. Okay, it's stayed above 50% retracement. Pretty strong price action here, although today's candle has not been closed yet. If it closes above 0.80, that's a very strong candle. We might see some follow through in the next, during the week. But the upside is also limited to this declining trend line at the moment and the 200-day moving average. Okay, so be careful here again, because to me there is some upside as far as momentum goes, with the RSI tagging 70 and failing to break below 40 here. If this RSI pushes back above 60, that to me that means we are building momentum. Okay, but again, we need price action to clear above the declining trend line. I think a clearing above 0.8155 will be a major signal there for the euro pound to open up these highs here all the way up to 90.79. Although there will be some challenges along the way, but the point is that would be a major sign that we could be bottoming. Okay. Now looking down the lower time frames, here's the 4-hour time frame. You see the reversion back to the mean already resolved. Okay. And we're consolidating here just above the 200 moving average in the 4-hour chart. You know, I don't have an edge here because it looks like, you know, the market is bullish, but we lost that bullish momentum in the 4-hour chart. You know, just waiting for this market to resolve a direction. I think it's going to be choppy within these two trend lines. So, you know, what can I say? I would continue to monitor for further clues. Sometimes, you know, you just don't have a trade, and you have to make sure that to stay out of the market. Now for the dollar yen, now I've been waiting and stalking this pair for quite a while now. The main idea here is to go long, because when we look at the daily chart, look at the weekly chart actually. Let's start with the weekly chart. Okay, it seems like we are trying to find the bottom here from our historic low, 75.56. If you look back, you know, we've been in this in the weekly chart. We've been in a very persistent bearish trend. You know, as far as momentum goes, it's been very persistent since 2007. RSI, you know, kisses 30 here, you know, tags 30, comes back, stays below 60 for the most part. You know, you give it some elbow space, and then it comes back again up to 60, comes back up to 60, comes back, holds below 60, comes back, and this time in 2012 we broke above 60 and actually tagged 70. So for me, that's a major shift in momentum we saw earlier this year, and then we got a pullback, a throwback. Okay, now downswings have been able to make lower lows throughout. Okay, I'll just come back to 2009 here. Start with this downswing, because there seems to be a pattern over the past few years as far as timing goes. Okay, we saw the downswing start in April. 33 weeks later, we saw the downswing capitulate at the end of November. Okay, in 2010, we have a 25-week downswing from May. You could argue that it was from earlier, maybe in March as well. But if you start here from May, it came all the way down through October, around 25 weeks. Okay, and the latest downswing in 2011, again in April, down to the end of October, 28 weeks. So far this year in 2012, we have had 27 weeks. Okay, and that started in March, late March, and now we're entering October. Okay, so all these downswings started in the second quarter and ended in the fourth quarter. Okay, so this is what I'm looking for this year again. Another downswing from the first quarter, and we're entering the fourth quarters. So the consideration is there. Okay, and I think this is more of a position trade. That means we're going to have to hold for a long time. So you want to have a small position here. You don't want to tie up too much of your capital in a trade like this, because it could take a while. We're at this bottom. This bottom itself took. Let's see. This bottom itself. I would say let's call it around here to here, around 27, 28 weeks. So it could take a while. All right. But for me, the upside, at least to 84. Downside, a break below 75.50 would invalidate that bullish outlook. Okay, so the reward to risk is worth it, and for me, the appearance of this strong momentum, and especially if the market does hold the bottom above 75.56, that shows me that there is a bottom brewing. It might take a while, but there is a lot of upside for the dollar yen if you're able to hold through quite a maybe a few months. Okay, so that's the dollar yen. Very different type of trade than if you were looking at the 4-hour chart, the daily chart. We're looking at the weekly chart here to set up for a long-term position. Okay. Aeneas, one more time, the Bollinger Band parameters I have are 3 standard deviations from the 200 moving average. Okay. Let's see. And you know what? To highlight that reversion back to the mean, let's take a look at the euro yen here. Okay, this is what I mean. You have your, this is actually a market that started to trend here. Well, let's start with this. Let's start with the daily chart. Okay. When you see the daily chart, you see that the market has been bearish, right? It's been bearish. You see a very wide bullish divergence here. Okay. As the market dipped into, I believe this is not a record low, but quite a 15-year low, something like that. We haven't seen these levels for a while now, since the inception of the euro. And okay, so within this rally here, let's go back to the 4-hour chart now. So we were in a bullish trend here, and when you look at this, we tagged the lower Bollinger Band. The RSI was giving us a bullish divergence. The Bollinger Band was giving us a bullish divergence. That in and of itself just means that we are exhausted. The downtrend has been exhausted. Now that doesn't predict this rally here. Okay, just because we did have a rally like this doesn't mean that this signal here predicted this rally. It predicted that the market was going to be stalling. It was going to have a correction. And at that point, a reversion back to the 200 moving average would have been a valid expectation. Okay. And we did get that. We sort of consolidated here a bit. Okay. And then we broke above, and now we started to push the moving averages in the bullish alignment. The RSI started to stay above 40 and tag 70. Okay. And then here again, we tagged the upper Bollinger Band. Okay. Somewhat of a bearish divergence up here, but as far as the Bollinger Band goes, it was actually pushing it wider, so it would have been a tough call here for the top. I wouldn't have called that top, but we did get a double top here. Okay. And at that point, the reversion back to the mean was the play. And now we have reversed back to the mean, and this is a major support area, right? The 200 moving average here, we have the rising trend line, and the market indeed has been able to find support, find some demand here, and we have a very strong candle here that shows us the demand. Okay, so I think in the short term, there is some bullish outlook in the euro dollar, but I wouldn't be, confident on this. I wouldn't be very confident. So I would want to have, I wouldn't want to get in up here. I would want to wait for the market to come back down a little bit to risk it. First of all, this decline here could invalidate my bullish idea. Then I would stay out of a false break, false reversal, and it would give me better reward to risk, because I want to put my stop below these support factors. Okay, at this point, there would be too much downside risk for that. Okay, so we do have a strong bullish price action here that we could try to follow through and follow along, but I would want to wait for a retracement. Okay, now that means if the market just starts shooting up like that, we'll miss it. That's part of the game here. Whenever you have some kind of disciplined entry method, you are going to miss those price action that doesn't fit into your plan. And a lot of market action will not fit into your plan, but that's not not your goal. It is not to catch every swing in the market, but to catch ones that you feel like has an edge. Okay, so let's all right, so I think I accidentally deleted this trend line here, but you also have an upside, a limit to the upside, and I will limit that to our previous high here, because I think if the market gets back there, we're going to be testing a declining trend line. All right, so we do have an idea here for the bullish outlook. Okay, but in the very short term, I would like to see a bit of a pullback. Okay, actually, now that I'm in the 1 hour chart, what I really want to see is the RSI able to tag 70, the price action able to stay above or cross 101 handle, stay above this 200 moving average, and then when I get a pullback, when this RSI, if it's able to push above 70, and comes back to somewhere between 50 and 40, then I would be getting ready. Okay, price action probably around this area here, 170 area. Okay, that would be my ideal bullish trade. Now, there is still going to be a lot of risk, but the idea here is that we get some extra clue. The probability for me has improved. Okay, and in that scenario, I would put my stop somewhere in the middle of this range. I would have to figure it out. Wherever this tops off, maybe I'll extend the I'll extend the Fibonacci tool here, and make the stop below 61.8%. Also, I would want the stop below these clusters of moving average. Okay, because to me, there could be a pretty sharp retracement, and but if it stays above the moving averages, stays above 61.8% retracement, I have a good probability back to the upside, as well as if the RSI stays above 40. Okay, so those are some of the additional clues I want to follow through with this bullish outlook. Okay, those are the pairs I've been focused on more or less. I've been looking at the Aussie dollar too, but it's I'm sort of waiting for clues again. This is a pair that in the 4 hour chart, we lost the bullish momentum, but we haven't established bearish momentum. There's a retracement back to 61.8%. That was a key level here. I was actually monitoring 1.03 20 to 40. This is a good area for very short term or near term buys, but when the market is back up here near 1.04, I think if you're in this is a good area to lock it in. Okay, because I'm not, I can't be confident here that the market will definitely push the Aussie dollar back up. So Aussie dollar, let's go to the 1 hour chart. Okay, so in the 1 hour chart, you see the RSI swinging back and forth. Now, not a very good clue of direction at the moment. And we're actually still creating lower lows, lower highs. Although here it looks like we could be forming a double bottom. The way I would look at it is this is a sideways market, or the market's sort of anchoring into a sideways mode after a slightly bearish mode, and it's all corrective. Okay, and I would stay away from this until we get to some key levels. For example, down here, maybe this could be another level to monitor for for a buy. Okay, and in these situations, the target would just be the 200 moving average. So the mean price action. So we're expecting the market to go from oversold back to the mean price action. Or if this market comes back up here, now I like the 1.50 area better than this 1.4750. I would like to plan a short up here, again with the target down to the 200 moving average. Okay, and these are just trade plans that are still developing. They're not. They're sort of. I'm sort of picking areas where the market, where I would start focusing. At this point, if there's a very strong bullish candle, for example, pushing above 1.05, I would be less inclined. If the market starts to show resistance here, okay, then I would be more confident that there is resistance, because I would have to first see the resistance, and then I would be more confident. All right. Okay. You guys let me know what other pairs you want to take a look at. Now, I do want to maybe bring in gold and silver. Not sure if you guys trade that. Let me know. Do you guys want to, take a look at another pair? Just put that in the chat. But gold is interesting because it's pretty much attacking the 2012 high here. Okay. And this is coming after a sort of expanded flat type of pattern. Expanded flat, whatever you call this. But at this 1790.20, I'm still looking at resistance. But I think I would let it go a little bit higher towards 1800, towards our pivot here. Okay. So what could be developing? We get a higher high, we get to this pivot, maybe even clear it. Okay, but I think at this point we could get some strong correction. Now, as far as target goes, I'm going to be looking at max. It will be down to 1700, maybe 1704, 1710 area. Okay, but I would start managing my trade, moving up and locking in profit as the market gets into this consolidation area, because I can't predict at that point if the market will indeed respect this consolidation area and continue higher. Okay, we are basically at this point looking at a counter trend market. Okay, and you can play that in the daily chart and maybe the weekly chart, but not, when you're looking at the 4-hour chart, it's a very bullish market. Okay, but when you look at the daily chart, okay, it's been sideways since 2011. Okay, and if you look at the RSI, okay, let's start off here with the top. Now, down here, we have a bullish divergence. Here we have a wide bearish divergence. Okay, here we didn't have any setup here. And I would be looking for a bearish divergence here with the market at key resistance levels for a short-term corrective idea. Okay? So this is sort of looking at this as a range, and the target 1710, you could say that, in this range, you could technically say you could target closer to the middle, but I want to be conservative because of all this, possible central bank activity, and when central banks are adding stimulus, that's you can expect gold and silver and these non-fiat currencies. I mean, they're not currencies, but you could call them currencies, I guess. They will go up because, you can't increase the supply of gold and silver just like that. but central banks can increase the supply of fiat currencies. Okay, so we are going against a trend here in this medium term, but in the longer term, as far as looking back to 2011, we could be looking at resistance there at around 1800. Okay. All right, so let's take a look at Kiwi, New Zealand dollar. Kiwi has been resilient, has been stronger than the other majors. Okay, it's been able to break above a declining trend line going all the way back to 2011 to June of 2000 or July of 2011 here. So that's a major break. But I would, we have some resistance here. Now, I was actually looking at this market and waiting for it to come down towards these lows to go for a long position. Okay, going back, reverting back to the 200 moving average, closer to this rising trend line. Okay, so the market's not giving me that at the moment, but that is still my anticipation. Now, as far as to the upside, because I see so much downside risk here, I'm not going to be able to get in on this rally if it does rally. But when it gets close to 84.70, this high here, and the 85 handle, I'll probably be looking at a reversal from there. Okay, at that point, my target would be back to these highs, these previous highs here. Okay, the aggressive target being, I would take the analogy of this consolidation period and put my aggressive target down to this pivot here, 82.40, 82.50 area. Okay, but I would start, as far as trade management, start 84, 83.50, lock it in. If there is a resistance, if there is supply here at this previous, pretty much 2012 high. Okay, so 2012 high is the next resistance to look at, but I'm actually I'm favoring the bullish outlook, and I'd rather see the market pull back a little further for a bullish idea. Okay. As far as lower time frame is concerned, we tag this upper Bollinger Band. We have this ABC, up ABC. So structurally, this does look like a completed correction, maybe a double three in terms of Elliott wave terminology. Right? ABC, connector, ABC. I don't know. That's a possible assessment there. As far as RSI goes, the momentum has been bullish. We had a little violation of 40 here, but given that elbow space, we pretty much kept the RSI above 40 in this 4-hour chart, tagged 70 again. So momentum seems to be persistent. Okay, but if you are, if you're not going to wait for this pullback to 80.75 area, I would still wait for sort of a pullback here. Okay, maybe down to 82.50. Okay, but you would likely need your stop below this previous low here, or maybe below the 78.6% retracement. Okay, 81.80 is probably where you should put your stop if you're gonna play this, this rally and then an ABC correction back to 82.50. But then you see, there's a lot of risk there. Below 82.50 down to 81.80. Okay, what you can do in these situations, and what I do attempt sometimes, is that I would put in a very small position. If the position, if I'm not as confident, as confident as I want to be, and that's, it's not always going to be black or white. Now, I do like that sort of mechanical decision where you either say yes or no. Okay, that's the ideal way to go about it. If you don't see an edge, say no. But I think there is a gray area there. But it's sort of a gray area that's going to be that takes sort of time to practice building. So in this gray area here, if the market comes back here, now I do want to buy, but I do see some further downside risk. So what do? Do I wait for the market to give me better reward to risk, or do I get in? If I get in, I risk more. If I wait, I risk not getting into the trade. So there's that trade-off. And to get in the middle of that trade-off, sort of compromise, I would say, I would get in a small position, 82.50, okay, and then plan another small position at around 82.20, or maybe a little lower, 82.20, let's say that, so that your average would be 82.35, okay, and you improve your reward to risk a bit. Okay, it's still a risk, a lot of risk. Okay, like 50 pips. And the upside to this, like I said, to the 2012 high, that would be your maximum target. 80. Let's not even go to 84.70. Let's look at the more common highs here. 84. Okay, so that's about 150 to 50. Okay, 3 to 1. All right, I'm just doing a very rough estimate right now, but it's around 3 to 1, maybe a little less. It's maybe between 2 to 1 and 3 to 1 for this bullish idea. Okay. But again, I would start managing my trade as the market gets back to these highs. I would want to lock it in case the market decides to continue this choppy sideways market and maybe even dip a little bit. Okay. All right, so that's Kiwi. Let's take a look at silver, and I think that should wrap it up. Okay, here we go. I mean, just like gold, silver is making a very strong rally today. Made a new high, but being rejected at the moment. As far as looking at silver in the 4-hour chart, ever since we broke above this consolidation area, okay, we have had very persistent bullish momentum. Okay, even starting here, RSI tag 70, stay above 40, 70, stay above 40. Okay, so you could go and back test this. You could maybe test this in your demo account if you're not applying this. But if you do see a strong trend, you don't want to get in the trend when the market is up here, when the RSI is up here, because it is a bit overbought. Okay, and even though you will miss some of this rally, right? In other cases, you'll probably get whipped back down. So basically, you see the RSI push above. In hindsight, getting in here would be pretty good, right? But to me, that's not going to be a disciplined trade. I would rather wait till the market comes back. And for this, it didn't come back till later. And even then, it didn't come back to give me a good price down here. Okay. So in hindsight, okay, so the disciplined trade method might not be the most in this case would not have given you the best profit. But that's how it goes. Sometimes you're not trying. you have to be aware of the trade-off. And in this case, you wait for the RSI to come back, even though you don't get the best price. You do wait until a corrective cycle is over. And here we have again the RSI came back to 40. Okay, price action came back down, and we have a push. Now it looks like that the market's having a little trouble here, pushing for that bullish momentum to come back. Okay, so for me, if this market sort of continues to make higher, to make a new high, but the RSI doesn't push above 70, okay, but price level does push a little higher, I would be getting ready at the 2012 high here for a correction. Okay. Now the target for that would be back to our current consolidation area. Okay, maybe towards the bottom of it. But again, as far as trade management goes, I would start managing it, locking it in when the market comes back to the top of the current consolidation area. Okay. Now, okay, so basically there's too much downside correction here for me to go long, although if you are in a very short term, if you're in the very short term trade, you could probably look for a very short rally from this breakout. Okay, put your stop below the middle of this range, maybe this pivot here, 34.15. Okay, so you have to look for a better reward to risk. Wait for the market to come back down, 34.50, 30 area. Okay, that could probably give you a better reward to risk, and then let it push higher. I think in the 1 hour chart we have a better plan here. Okay, so in the 1 hour chart, you see this coming back down, right? You see the RSI coming back down as well. When the RSI is between 50 and 40, that's probably a better place to try to follow this breakout. Okay. All right, so let me just, I think that's it for today, but I'm going to take a look at your comments. Talking above band is a strong run, less risk. Not sure what you mean there, Jack. Are you talking about silver? Is this a fake? Is it a fake breakout on gold? Just like silver and gold. Okay, so for silver, for me, this is a false breakout if the market is able to break back below this pivot here. Okay, and that's why for me, if you want to play the breakout, you want to wait for the market to come back to close to that area, but obviously not to break it. If it breaks, then I would stay out. But this sharp retracement here comes back to 30, 40, 30, 35 area. Okay, I would start considering the long there because it's not too far from where I would invalidate the trade, and there is some upside there towards, let's say, 35, 50 area. Okay, and for gold, I think it would be a very similar. See, I look at this 1765 area as the central pivot of this range, and if the market breaks above, comes back, and it stays above this area, I would consider the breakout to possibly have legs. Okay, so put a stop down here below these moving averages, below this central pivot. Then you have a better reward to risk, right? The risk is here, the reward is back to these highs, maybe 1800. Okay, So that's how I would play the breakout, although this breakout is not very convincing. Okay, there is strong price action, and as far as momentum goes, I do like the fact that it tagged 70, held mostly above 40. I don't like the fact it broke below 40 here, but it did tag 70 again. So as far as waiting out the retracement, I would want to see the RSI here back, between 40 and 50 before considering going back up. All right. So that is it for today. Seems like I'm mostly on the risk on side, or the dollar weakness side, except for the euro. Except for the euro, I'm a bit bearish. Okay. But as far as Kiwi, I'm a bit bullish in the very short term. Euro yen, actually, I'm a little bullish. Dollar yen, that's really the main focus. I'm looking for a buy here to last me a few weeks and maybe even some months. So a very small position to add later. So that concludes my look at the market today. Thank you for your time, and I'll be back next month. Thank you, FX Street, for having me, and thank you guys for your attention.